The oil price has been something that was also been interesting to watch after Buenos Aires and ahead of OPEC. Oil spiking on the expected production cuts up by more than 3% today to 52.65 per barrel. You also had Qatar, the nation of Qatar, coming out and announcing that it plans to pull out of OPEC. Now, that's just days before the meeting in Vienna. Let's bring Phil Flynn in on that. We'll get to price in a second. Is that important, the Qatar news, getting out of OPEC?
It is and it isn't. I mean, from an oil production standpoint, not really. I mean, they're only producing 600,000 barrels a day. And obviously, the reason why they're leaving is because they feel that they really have no sway in the OPEC cartel anyway. It's like, what are we doing here? You know, in the past, Qatar used their influence in the cartel to be the middleman, you know, to talk to Saudi Arabia, to talk to Nigeria, talk about different countries and try to bring everybody together. But now with the new Crown Prince bin Salman kind of, you know, demanding everything in the cartel, they feel like, hey, what the heck are we doing here? We're wasting time. You know, you need us more than we need you. We're ready to go. We're going to focus on natural gas, which is where their real production future is. So goodbye OPEC, hello natural gas.
So put that in the rear view for a minute, and let me ask you about price movement today. We know we've been down a ton, but to get back up here to 52.60, what's going on?
I think it's two things here, Connell. I mean, one thing, of course, going into the weekend, the market was uncertain whether OPEC and Russia could actually come together and come to some kind of agreement on a production cut. Well, they did. They got that done. The number that we're hearing could be as much as 1.5 million barrels, which would be enough to get this market going. But I also think you can't underestimate the impact of the trade truce with China. That's been one of the concerns on oil prices. It's not just about the supply. It's about demand. And with the deal, the demand should be better.
Right. It didn't really, we didn't get anything done, but it's more pro-growth, right? I mean, or at least that's like kind of like the glass half full version of all of this. If you don't go from 10% to 25%, you can have pro-growth policies. Now, to be fair, Phil, a lot of that could flip around in 90 days if we're back where we started.
It sure can, and I think that's one thing you got to look at when it comes to this cartel. The other thing I will say is that we did get a report that China's actually importing oil from the U.S. again. U.S. refiners are already starting to buy that U.S. oil again. And one of the things that's been lost in all of this OPEC talk and concerns about China was the fact that the U.S. energy producers exported more oil and oil products than they ever did before last week. You know, so we keep hearing about this slowdown in demand. We're not hearing about that from the U.S. producers right now.
Interesting. 52.61 is the price. Good to see you, Phil. We'll see you again later on.
Thank you.
Phil Flynn.